So I'm giving away $6,500 cash on learnplanprofit.com, and I'm also giving away $2,000 cash on TechBuds Apparel. And I've been getting asked this question very often. If someone were to win, right, where would be the best place to invest this money? And this is something that I think a lot of people are asking themselves as markets have aggressively dropped. There is no question that 2022 has been the year of the bear market. It's been one of the longest bear markets in a very long time, meaning that it hasn't even recovered. Let's just use QQQ as an example, which is the NASDAQ ETF. We can see that based off of from previous all-time highs at 406 and where we're at right now, we are down nearly 30%. Again, anything lower than 20% is considered a recession. We even have SPY. SPY is considered the S&P 500 ETF. And based off of previous all-time highs, we can see that right now we are down 15%. It is to be said that, again, arguably one of the best investors of all time, Warren Buffett, said if he were to die, where would he invest his money if he were to be able to just choose one specific stock and or index, and he chose the S&P 500. With that being said, I wanted to talk about if you had $5,000, right? I feel like on average, that's normally what someone starts investing with. Not trading, not saying aggressively trading those meme stocks. I'm talking about investing because markets are very oversold right now, which means that there are great deals. What would be a decent investment long term, meaning that you don't have the intention to sell anytime soon? I wanted to share your thoughts. I want to share my thoughts with you guys, and you guys can let me know in the comment section if you agree. There are going to be ones that we're going to talk about. They're a little bit more risky, but we're going to leave those to the end. The first one that I want to talk about is we have to S&P 500, right? If we were to start investing with $5,000 based off of that 15% pullback, which is a pretty decent pullback, upside potential, right? It's always going to be more than what it gives back. Is around 18%. So if we see in a perfect world, obviously there's no such thing in as a perfect trade. If you were to invest $5,000, that would be a $900 return. Now, obviously, this would be considered a very safe play because it's pretty diversified, right? It's considered the top 500 most valuable companies that are publicly traded that make up the S&P 500. And you can simply invest into these indexes. So therefore, you're pretty diversified without having to actually invest in a lot of different companies. Now, if you wanted to be a little bit more risky, this is considered the NASDAQ sector, which is the tech sector, which is mainly made up of tech companies. And we can see from current lows to previous all-time highs, it offers a 42% return. So with $5,000, that would be roughly $2,100. So you'd go from $5,000 to $7,100 in a perfect world. Now, of course, the markets can get worse before they get better, but I think that we can all agree that based off of the recent CPI data report and based off of the idea of the Federal Reserve finally beginning to potentially pivot, it makes sense that the NASDAQ market or the overall stock market can finally be reaching lows, right? Now, let's get into the juicy stuff. Have you guys heard about Amazon stock? This is one example that I wanted to show you. One thing that I really like doing is I like looking at the current price levels and when was the last time that it was trading at these price levels. And this is the crazy part about this. Some people might be like, well, Ricky, I don't know if right now or if now is the best time to start investing. First off, you can never predict the future. So it's not ever that there's a best time. It's always like asking yourself the question, is it a good time? Looking back in 2015 when I bought my first house, everyone was telling me back then in 2015 in Arizona that the market was going to crash. Fast forward 7 years, I bought that house for $176,000. It's now worth over $500,000. It's something that I just use as a rental property. And guess what? I didn't buy it at the lowest price point in that entire neighborhood. There's people that got it closer to $100,000. I paid nearly double that. But guess what? I still made money on it. I still got it for a good deal long term. And I think that's the thing that people refuse to pay attention to. It's that long-term intention. So let's go ahead and talk about Amazon stock. If you invested in Amazon stock, I'm sorry to say, pretty much in the past 4 years, you've pretty much given everything back if you didn't lock in profits. And what I mean by that is look back at this. This is the date of time, right? 2018. The last time that Amazon stock was trading at an average of $93 a share was back in 2018. So if for the past 4 years, you have been, I don't know if I want to get into the stock market. I already missed that bull rally. Then guess what? This is an opportunity if you see it as that, right? We are back to 2018 levels. Everyone that's been invested in that didn't lock in profits has given back everything that they've made. And ROI potential. Think about this. This is Amazon stock. Ask yourself a simple question. Do you see Amazon, the company, going anywhere anytime soon? Do you see it going bankrupt? Of course not. It's a monopoly. It's one of the largest companies that's publicly traded. This thing offers 100% ROI. Imagine putting $5,000 and making another $5,000, being up, or you're having your overall account balance double of what you started with. So the example that I'm giving is 5. So now you end up at $10,000, and they ask you, oh, what crazy investment did you invest in? And then you tell them, I invested in Amazon. I invested in Amazon during an uncertain time, but I just focused on getting in at a good deal. I knew that my intention was long term, and that although it might pull back when I first buy it, understanding that there's more upside potential than downside risk, right? And I think that's the beautiful thing about Amazon is if you position yourself effectively. Again, a very simple question to always ask yourself is, can you tolerate the time that it will take for the market to recover? Now, I want to use also Tesla as an example. Tesla dates back to 2020, if I'm not mistaken. So if you've invested in Tesla in the past 2 years and you haven't locked in profits, you have given everything that you've made back. And again, this is back at the end of 2020, and then it popped off, it pulled on back, popped off, and now we're pulling on back down to that end of 2020 levels. Can you guys guess? Can you guys guess what Tesla offers based off of ROI potential? Based off of previous all-time highs, especially if you're someone that really believes in Elon, 130% ROI. Obviously, I don't see Tesla to be as a secured or as a safe investment as Amazon. In comparison to a company and how they ran, I see much more expansion potential, possibly, right, for Tesla, but it's viewed as a higher risk, right, because Elon is kind of an uncontrolled variable, right? I believe in Elon. I love what it is that he's doing, but let's be honest, right? All emotions aside, I would say Amazon's much safer, but I just want to make sure that we talk about Tesla. Now, I want to talk about Google, right? Alphabet, one of the largest advertisement-based platforms out there. We are dating back to kind of like early 2021 or late 2020. And again, you have to think about it. Google isn't going anywhere. That's one of the largest search engine in the world. And this thing offers 56% ROI. You can even reach out to any, investment advisor or any fund manager, whatever, whoever it is that you want to run this idea by, of like, hey, I have this money that I want to put into the market. How much and what do you think about investing in either these quality companies at these oversold levels, just buying and leaving it there, or if I should stay diversified and invest into something like the SPY and or the QQQ index, right? So the S&P 500 or the NASDAQ index, so I can be a little bit more diversified. Obviously, if you're playing it a little bit safer, you're not going to make as much on the upside, but it doesn't matter. I think the biggest mistake that you can make is during this downtime to try to make an excuse on why to not be invested. I'm using the example of $5,000 because of our $2,000 cash giveaway on apparel and because of our $6,500 cash giveaway for LPP. But realistically, if your excuse has always been, well, I don't know if now's the time to get started, then guess what? Even if you buy one share, buying one share and just experiencing it and testing it out is better than someone having an opinion and always sitting on the sidelines. Think about all of those family members, think about all of those friends that always talk about buying a home but never do it. You can come on in, buy a house, and even if you bought a house 4 years ago, you're still better off than where they were because now they're still complaining about how inflated property values are. And again, it's always those that talk and that have a loud opinion that never actually do anything. So especially with this up and coming year, 2023? Are you someone that wants to continue to sit on the sidelines or do something in a calculated way, right? You don't need to buy it with $5,000. You don't even need to buy it with $1,000. Stop and remove your ego, right? The whole point is to get started. And even if you just buy one share of Tesla, buy one share of Amazon, buy one share of Google, buy one share of SPY, it doesn't matter. Put yourself in a position in which you can tolerate. Remember, it's not an if the market will recover, it's a when. Can you tolerate the time that it will take for the market to recover? That's the magical question to ask yourself. So make sure that you position size yourself effectively. I wanted to recap the overall day just so you guys can see where I'm at for the overall day. This is SQQQ. This is not an investment vehicle. This is considered a bear ETF. This goes up when the NASDAQ market goes down. I closed the day nearly at $14,000 in the green, and this was with a quick little day trade. And again, I day trade every single day live. I don't just post my profits, but I do it live in front of my team every single day, and that's my Learn Plan Profit group. That's going to be that second link in the description. We're running our biggest sale to $150 off. All you need to do is at checkout use promo code Black Friday for $150 off, and you get automatically entered into our $6,500 cash giveaway. I will be announcing the giveaway winner on November 29th. So as long as you enrolled in between November 14th and November 28th, then you get automatically entered towards this $3,500 grand prize giveaway, $2,000 cash giveaway for second place, or third place of a $1,000 cash giveaway. At the end of it, again, we all win. Huge sale, $6,500 in cash, or if you just want to pick up some apparel, then you get automatically entered to win $2,000. A chance to win a total of $8,500. And again, all the links are in the description. For the apparel, it's at shoptechbuds.com or the fourth link in the description, or for TechBuds, learnplanprofit.com. It's the second link in the description. Just click on this tab, and then it will bring you on over to this little site blog where we break down exactly what the giveaway is and breaking it down on how you can enter. It's super simple. Again, that's that second link in the description. If you have any questions, feel free to direct message me via Discord, and that's that first link in the description. Or if you're on Instagram, feel free to send me a direct message via Instagram, and that's that third link down below. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.